Nvidia, I kind of left it for last because I feel that's the one with, somewhat oddly, the least amount of ambiguity around it right now. Since essentially the summer, valuation has existed since the mid-40s. The stats continue to impress. It appears that no one can compete with them. So, do you have any strong opinions about what has been priced in, or where it might go next year? It's not. I believe that investors have been a little anxious since the FC rate decision on December 18th, fearing that the Fed might not be as dovish as they initially believed. However, I believe the basics haven't changed. This is a little frustrating to us, but I believe there is some uncertainty about the Fed and some profit-taking going on. The fact that 2025 is looking to have a lot of tailwinds, however, doesn't really change that in my opinion. Therefore, this doesn't. This merely postpones a portion of the continuing in the secular bull market you have been discussing. Yes, exactly. I believe that one of the lessons learned in 2024 is that there have been times when the market has been sluggish and erratic. We are aware that when that occurs, investors tend to go pessimistic very quickly, but it turns out that all of these have turned out to be buying opportunities. There doesn't seem to be any indication that December has been a poor month. Given that this should be a seasonally good time, it is plainly disappointing. However, even if we end the year lower, even if the S&P is down 5,900, I don't think it will diminish the fact that there will be a lot to look forward to in 2025. What does it mean for next year that what you were afraid might occur this year has been postponed? What do you think we're in for, say, the first part of next year? Do you believe that the first half of the year may be a really good one, considering values and the current state of multiples? What happens to CEO confidence in the first few months of next year is, I believe, one of the things we're keeping the most eye on. For the past 2.5 years, we are aware that they have been careful. Metrics like the ISM manufacturing, which has been below 50 since October 2022, make this very clear. And that's substantially connected with S&P earnings growth. I do think that that's going to finally return to above 50, kind of suggesting that we're back into an expansion, CEO mindset. It is purchasing managers, Furthermore, we have an incoming administration that in the end, markets will see as pro-business, which I believe will rekindle animal spirits. Additionally, I believe the Fed will turn out to be dovish. They are still in favor of markets even though they are attempting to define neutrality. Therefore, I believe it's a terrific mix for equity gains. That's a lot of upside from here, and I believe the S&P can approach 7,000 in the first part of next year. 7,000. You've made some urgent calls regarding inflation or the markets that are predicated on it. Do you believe that the current concerns about it reheating are unfounded at this time? Well, I do believe that concerns about inflation are unwarranted. For whatever reason, January usually doesn't seem to be seasonally adjusted away, and I am aware that many people are clamoring for a return to inflation. As a result, the January CPI appears to have surged. However, I believe that wages are the main cause of inflation, and the Federal Reserve has stated that the labor market is not in an inflationary state. It's shelter, and as we all know, shelter is really just a way to bridge the gap between market pricing, which are less inflationary, and how statistical adjustments bring the CPI to where it should be. We also know that over the past 5 years, auto insurance has significantly inflated the CPI, which is cooling. I am unsure of the precise reason for a second wave of inflation, unless there is an impending supply shock. Therefore, I believe that there is a chance of inflation in 2025. Since Nvidia, oddly, seems to have the least amount of uncertainty surrounding it at the moment, I kind of save it until last. Since essentially the summer, valuation has existed since the mid-40s. The stats continue to impress. It appears that no one can compete with them. So, do you have any strong opinions about what has been priced in, or where it might go next year? Yes, I believe you're just witnessing their ongoing cycle of growth. I fully am on board with that, right? What matters most is the extent of their growth from year to year. Naturally, and I believe we have discussed this up to this point, it won't appear as spectacular year after year. It will not be triple digits like it has been quarter after quarter and year after year. Although it will be far more modest, they are undoubtedly in a good position to grow. Actually, I think one of the things I'll say about this stock is really fascinating. My discussions with investors and the industry now remind me a lot of my early discussions with them at Apple, when it seemed like everyone agreed that the next cheaper competitor would just upend them. That wasn't the case with Apple, though, due to their platform value, customer satisfaction, and ecosystem stickiness. I sort of usually make the same comparison, which is that if you just take a look at Nvidia's larger ecosystem and platform play, it's not all that different from the story that's currently being told about Apple. They face competition from hyperscalers who want to produce custom silicon, which is clearly the main point of contention, but that only accounts for a small portion of the semi-infrastructure spending that will occur over the next several years. Many of the enormous capital expenditures that will occur over the next few years, along with the extremely high cloud AI forecasts, ranging from $300 billion to $600 billion by 2028, depending on various projections, are simply greenfield growth, which adds TAM. Nvidia is completely well-positioned in that space. It goes without saying that Broadcom is, that name comes up, Marvell, and even just AMD and Intel. These are the actual players who will compete for the enormous TAM expansion in data center infrastructure that we are witnessing. Okay, so there are a couple more that may still be included. We discovered that Broadcom was undervalued in relation to its earnings. Obviously, Ben, I really appreciate the background information and the ideas. CapEx is skyrocketing into the tens of billions of dollars per quarter as a result of big tech's AI spending binge. This includes one of the largest spenders, Microsoft. Joining us to analyze the significance of all these enormous figures is our own Steve Kovac. Steve? Yeah, Mike, and it might even be the biggest spender. Microsoft's ending 2024 spending at least $53 billion on capital expenditures, and we don't even have the newest data for the current quarter we're in yet. We'll receive that in a few weeks. Nearly all of that is for artificial intelligence. It will continue to do so for some time to come. This includes Nvidia chips, data centers, and other associated infrastructure for those data centers. Microsoft indicated that through 2025, these capital expenditures would cost almost $20 billion every quarter. Investors losing patience for a return on all that enormous spending is, of course, the risk. Furthermore, Microsoft is unsure of the exact date of the event. In previous earnings calls, CEO Satya Nadella and CFO Amy Hood stated that Microsoft will continue to invest in order to meet the need for AI. Microsoft has independently disclosed at least $20 billion or more investments at different sites across the world in the past year. Spain, India, Indonesia, London, the United States, and many other places are included in that. These are training programs and other investments in artificial intelligence, not only data centers. As of right now, we are unsure of how well Microsoft's AI product line is selling. Microsoft has stated that, after spending roughly $70 billion by the end of the year, it is expected to make $10 billion in revenues related to AI this year. The Azure cloud business is largely responsible for that, although Microsoft has yet to make any firm announcements regarding it or the others. This includes Copilot Plus PCs, which debuted this year but lacked recall, the company's flagship AI capability. Microsoft stated in May that it anticipated selling 50 million Copilot Plus PCs in a year, but there is no proof that it is on track to reach that target. Furthermore, after more than a year on the market, we have no idea how well Copilot for Enterprises is selling. According to some CTOs I've spoken to, 2025 will be the year they decide whether Copilot is worth the astronomical expense and decide whether to increase or decrease spending. And then, of course, there's OpenAI, whose losses are now flowing over to Microsoft, its biggest supporter. Microsoft said it anticipates OpenAI's losses to take a few cents off its EPS in the December quarter, roughly $1.5 billion.